Let us review this buyback question of CA final SFM paper of May 2023. This is question number 1A, a weird question or there is some mistake in the question. Let us see. I'm assuming as this is a review that you've already read the question. The question says something about pre-buyback and post-buyback. So let us do some calculations of pre and post. The company has a market capitalization of 15,000 crores. So pre market cap is 15,000 CR. EPS is 600 with a PE ratio of 25. So MPS is 15,000 and number of shares will be 1 CR. Buyback of 20% of shares. So 20 lakh shares will be bought back. The board expects a post buyback market price of the share of rupees 10,000. So post MPS will be 10,000. That is very clear. And PER post buyback will remain same. So PER is going to remain 25. The loan can be availed at an interest rate of 16% and corporate tax rate is 30%. Now let's try to calculate. And in this scenario, EPS will be reduced to 400. Now see, this is weird. Immediately after buyback, your earning per share is decreasing by 200 rupees. I'm not saying it is wrong, but it is decreasing by 200 rupees. Let us also find out market cap, number of shares post buyback. 20 lakh shares are bought back out of 1 crore. So number of shares will be 80 lakhs. Now let us try to understand a simple equation of buyback. Your current market capitalization is 15,000. Current market cap should be equal to post buyback market cap plus value of buyback. Try to understand in simple terms, number of shares that were before buyback multiplied by price per share before buyback should be equal to number of shares post buyback multiplied by price of share post buyback plus value of buyback, that is number of shares bought back multiplied by buyback price. So let me also explain you logically, because it is relevant to understand that how we are solving the question is a correct method. Try to understand. Right now, number of shares before buyback is 1 crore and price per share is 15,000. Number of shares post buyback is 80 lakhs multiplied by some price. Right now, post buyback price is also available, which is 10,000. But let me keep it blank. Plus number of shares bought back is 20 lakhs multiplied by buyback price that we don't know. Understand, if buyback price is a market price of the share, say 15,000 in this case, 15,000 in this case, then post buyback market price of the share will be also 15,000. You can equate this left hand side and right hand side. It will remain same. It will be 15,000 crore rupees. if you will buy back at lower price, less than 15,000, say at 12,000 rupees, no one will then agree for buyback because you are giving less than market price per share. But suppose you are giving 12,000 rupees and people agree and you buy back the share as a company, then your post market price theoretically should increase. It will be greater than 15,000 rupees. And if your market buyback price is greater than 15,000, let's take another scenario. If your market price is greater than 15,000, say 20,000 rupees, then your post buyback market price per share will be less than 10,000 rupees. So you can understand the simple equation: post market cap plus value of buyback should be equal to pre-market cap of the company theoretically. Actually, what happens after buyback is, on liability side, equity share capital is reduced. On asset side, your cash reserve is reduced. Your cash reserve is reduced, so it will affect your future earnings. Your liability has decreased on liability side from equity share capital. So this equation should be very much understood. And now let us skip the real figures. We don't know what is a what is buyback price. So let us keep it as X, where X is equal to buyback price. So 80 lakhs into post market price, post buyback market price is already available, which is 10,000. It will always be expected. So we can easily find out X in this case. How we can find out X in this case? If this is 15,000 CR, this is 8,000 CR plus 0.2 CR X. This will be 7,000 divided by 0.2. That is 35,000 rupees. So X is 35,000 rupees, which is nothing but buyback. Now let us see the question. The interest amount which can be paid for availing the bank loan and the loan amount to be raised. Now see, the question clearly says the premium is to be paid by raising a loan from a bank. Buyback premium per share we need to find out. Very easy. Buyback premium is the amount of money over and above the market price of the share the company is giving to shareholders at the time of buyback. What is buyback price in our case? Buyback price is 35,000. What is current market price of the share? 15,000. What is buyback premium? 20,000 rupees per share. How many shares are bought back? Number of shares bought back are 20 lakhs into 20,000 rupees. This will be 4,000 crores. This is nothing but a total buyback premium, and the question clearly says that this should be loan amount. What is buyback premium per share? 20,000. What is the total buyback premium? That is loan for the company, which is 4,000 crores. What will be interest on 4,000 crores? Now the question is very vague. Understand, it does not define we need to find out interest for 1 year, for 1 month, for 6 months, for 4 months, for 5 months. We don't know. When the buyback is happening, we don't know. What is the time duration of the buyback? We don't know. Let us find out interest per annum. Then it is very simple. Interest per annum is interest per annum will be 4,000 into 16%, which is 640 crores. Now, will the company be able to pay this 640 crores from its earnings? It depends. What will be earnings after 1 year? Sir, can't we take this earning? The answer is no. This is immediate post earnings after buyback. So it might decrease, it might increase. Normally it will decrease because cash reserve because of buyback has decreased. So we cannot take this earnings. But let us assume that this earnings will remain same after 1 year. So this is our earnings. 400 into 80 lakhs will be our earnings. We are just finding out whether we will be capable to repay this or not. 400 into 80 lakhs. That is 320 crores. But this is profit after tax. What will be profit before tax? 457.14 crore. This will be profit before tax. Will this serve to pay this interest? The answer is right now no. But the question is not clear whether we need to calculate interest for 1 month, 1 year, 6 months. It is not clear. Post market price of the share, post EPS. See, what is the post EPS? It is 320 crores. Immediately after buyback. What is the earnings before buyback? It is 600 into 1 crore, which is 600 crore. This is the pre-PAT. Before buyback PAT. This is after buyback PAT, which does not make any sense. Just because of buyback, your earning per share might decrease or increase, but your total earnings will not decrease drastically. Your cash reserve will decrease. If you are borrowing loan paying interest, your future earnings will decrease. But immediately after buyback, the total earnings will not decrease. So this is just my opinion that this question practically is incorrect, or some figures are missing, or some figures are additionally given. If the suggested answers, excuse me, if I need to prepare a suggested answer for this particular question, the buyback price would be 35,000. Buyback premium is 20,000 per share, and total premium of buyback is 4,000 crores, which should be total buyback premium, which is nothing but loan taken by the company, and total interest before tax payable by the company is 640 crore on this particular loan for the period of 1 year. This should be the suggested answer.